everybody for joining me. My name is Jeremy Ritz. I am your host here over the next 4 days for the New Year Wealth Accelerator. And I am super excited about this class that I'm teaching over the next 4 nights. So this is going to be a lot of information that I'm going to be sharing with you, but it's something that I believe in passionately, deeply. This is my calling, and I'll talk more about that as we go through here. And as I talk a little bit about my story, you're going to find that the markets and trading, investing wasn't where my career pursuits began, but it's where I ended up and it's where I am now. And it is a goal of mine to share this information with as many people as I can. And I'll talk to you about why that's so important to me. But really what I want to do, and the goal over these next 4 nights, is to share with you the basics of investing and swing trading, so that when you leave here, you have a simple, basic framework that you can take and apply after you practice and prepare and have a set of rules to follow. But then you can use it to build wealth over time. And that's really what I want to provide for you, is just a no nonsense, straightforward, simple, easy to follow system, structure, process that you can use to get started in the markets. I'm going to talk to you about why it's important and really just share my knowledge with all of you tonight. I do recommend that you have some type of note-taking tool available for you, whether that's writing down notes in a notebook. That's what I like to do. Some people like to type, but if you're going to be here and spend 4 nights with me, with all of us who are here tonight in this virtual class, then I'm asking that you give your best effort, because you're committing 4 nights of your life. So it's going to be over 4 hours, probably closer to 5 hours. So why not get the most from this? And that's why I'm asking you to take notes and really just give yourself to this process. So that's what I want you to do. And so I am going to pull up the slides and we're going to jump in and get started. And so I'll be checking into the chat there every so often. So if you put something in there and I don't see it right away, I will make sure that I get it. And I'll try to make sure that my face stays on the screen here. And let me hit the present mode, and we're going to be off to the races. And let me do this. Here we go. All right. And let me move this over here. Let me shrink there we go. Perfect. All right. New Year Wealth Accelerator. Here we go. 2026. It is time. So these 4 nights are going to be focused on helping you build strategies, systems, structure for you to grow your wealth over time in a patient, wise, conservative, safe manner. And we'll talk about why we don't want to be reckless when it comes to markets. And every session is going to build on itself conceptually over time. So that's why I'm stressing the importance of being here all 4 nights, because night 1 is going to establish the foundation for what we're going to cover night 2. And if you're going to be in night 3, you need what's going to be delivered in night 2, and so on and so forth. So make sure you're here for all 4 nights. Make sure you're taking notes. Now, on the final night of the event, I am giving away $1,000. You don't have to do anything. You don't have to answer any questions. This is just going to be a straight up random drawing if you're here the 4 nights. So everybody who's here right now is eligible on that final night. If you're present at the end, I'm just going to do a random drawing, and one of you is going to get $1,000 that you can use to fund your brokerage account or to put in your brokerage account so that you can continue to grow your wealth. And it's just a way for me to incentivize this process, because I want you to learn investing. I want you to learn swing trading. I think that it's something that everybody should do. And so that's my little incentive for all of you. So best of luck out there for you guys. I hope that you win it, and that will be the final night. And also too, all sessions are going to be recorded. and shared. And so you'll have access to these and you'll be able to grab those from my YouTube channel. So a little bit about me. I'm your host, Jeremy Ritz here. I am the owner of Courage Pays Better Than Fear Trading. Most importantly, I'm the father of three. I'm a husband. That's the most important part here. And the picture is a little blurry, but you can see my children here. Actually, this one right here is not one of mine. So I have three kids and they're my sole reason for what I do. And they are learning the markets. So my oldest is 10, my middle child is 8, my youngest is 6, and they already can tell you what a candlestick chart is. They are already starting that process because they need to know these things, the things that dad never knew growing up. And in my previous life, I was an educator. I was a high school English teacher, became an assistant principal, was eventually a high school principal. I'll talk about that. And then found my way in a very weird way into the world of trading and investing. We'll talk a little bit about that. And just some little things about me. I absolutely love the stock market. I can't stress that enough. I've found my thing, which the smile on my face is real because I really do love this. But I also enjoy teaching and learning. You're not in education for almost 19 years and walk away from it and that's it. It's always a part of you. So that's why I still teach. I have that desire to share what I know. And I always said it at the end of the day, when my kids are gone and are out of the house, I'm probably going to go back and teach high school for a few years just to kind of put a bow on everything. I'm not ready to do that now because I'm enjoying my life right now, but eventually I'm going to, just because I love teaching. A huge Steelers fan. I do a Steelers podcast for fun on the side. And so I'm very happy after yesterday's win over the Ravens. And just a few other things about me. I'm currently training for my first Ironman this fall. I love hot peppers, including Carolina Reapers, in case you didn't know that. And this picture here of me too, these are really blurry. I'm not sure why they are, but this is me right here on the stage speaking at the last graduation when I was high school principal to just what was a great group of students. And even here when I was principal, I didn't know what I wanted to be when I grew up. I thought I wanted to be a superintendent of a school district. I was just going to continue to climb the ladder and eventually move into the state Department of Education, do all this, but it wasn't fulfilling. And I always knew that there was something out there that I wanted to do. And by the sheer grace of the universe, God, I found my way into the markets and I finally figured out what I wanted to do when I grew up. I get to do it now. And that's why I'm so excited to share that with everybody. So that's a little bit about my story and who I am. And what I want to ask you guys, there is no cost for this course. This is a completely free class. But what I am going to ask is I do have a YouTube channel that I do for Courage Pays Better Than Fear Trading. And I'm actually going to drop this here in the chat and ask for a small little favor. If you could go to the channel, and if you haven't yet subscribed, please, if you can give me a subscription to the channel and check out the content. I try to post every day, educational information about the markets, but this is part of my tool for getting the word out there about trading and investing. So if you could do that small little favor for me, then I'm going to pour into you these next 4 nights. So that's my little tiny ask here before we get started. All right. So I'm here tonight because I'm going to help you build wealth and legacy and be able to create personal freedom for yourself through the markets so that whatever it is that you want to do or that you want to pursue, you have the possibility to do that. You have that opportunity. And I was talking to you about whenever I was high school principal. So here's the thing. People don't realize how hard the life of an educator who actually is committed to the job is. It's a lot. It is a lot. Teachers who really care about kids, principals who really care about kids, they're giving of themselves freely, their time. It's a huge commitment. And for me, as a high school principal, it's not just the day-to-day 7 a.m. to 4 p.m. It was, you had board meetings to go to, you had volleyball games, basketball games, baseball games, football games, softball games. You had homecoming and prom, which I hated. I'll be completely candid. I hated going to prom and to homecoming. I was super pumped for the kids. They had such a great time. I was like, yes, this is, you go have fun. But inside, I was like, I'm going to be gone for almost 20 hours. I'm not going to see my family. And then the next day, there's post prom activities or after prom. I hated it. And what ended up happening when I was principal, I was high school principal for 7 years. I was gone from my family so much, 60 hours, 70 hours per week, weekends, nights. And with 3 young children, I was like, something's got to change. And that led me to the markets. And the way that I got into markets, I would never recommend it to anybody. And I basically got into it. I always have bought stocks and held stocks long term. But this guy here was like, I'm going to figure out how to day trade. And so that became how I started with the markets. And I actually had a little side hustle that failed. And actually trading was going to be my backup. But really quickly, it turned out that trading was how I had to provide for my family, because I quit my job. I submitted my letter of resignation on prom days of all things, finished out the year. I didn't abandon the school during the year, and finished out the year and didn't have a job. And I had 3 kids. Right now, I'd saved up money during my time as principal, but I didn't want to touch that money. So I basically just threw myself into learning the market, studying, reading, back trading, charting, studying, reading over and over and over and over and over. And while I was doing that, I was trading real money. And when the side hustle that I was doing didn't work out, it was like, well, I guess I'm a full-time trader. And so I had to learn basically through trial by fire. I had to figure it out, because if I didn't, then who was going to pay for insurance for my wife and my kids? Who was going to pay the bills? And that's how it's a crazy story. Like I said, I don't recommend that to anyone, how I did it, but it does give me a very unique perspective of the markets, how the markets work, how they can chew you up and spit you out. And I have the trophies to celebrate the beauties of the market, but I also have the scars and the battle wounds of how the market will punch you in the face repeatedly over and over and over and not feel bad about it. And you're there like, what in the world just happened? So that is my story. So I was just so painfully unhappy being away from my family that I wanted to be on my own, start a business. It ended up being trading. I fell in love with it. It wasn't a linear path, but it clicked for me. And now this is what I do. And what I could say is that in my time as an educator, we never talked about teaching trading. We've never talked about investing. We never taught kids that. As an adult, I didn't know anything about the markets. And I think I just reflect back on my life and say, if I would have known these things earlier, where would I be? In hindsight's 2020, I wouldn't change anything with where I am now. But, you know, we're basically taught, you know, this is for, the markets are for people with Ivy League degrees, for people who, you know, are from privileged families, or that it's not for us. But that's just not true. And that's the message that I really want to drive home. And that's why I'm so adamant in teaching this stuff, is that the markets are for everyone. And no matter what your starting point is, how old you are, how much capital you have, you can be in a better position 3 years, 5 years, 10 years from now, if you just get started. So that is one of my big purposes and focal points in teaching trading, is to drive that home. And so this is a personal mission for me. I want everybody to understand the markets, and you don't have to be a lunatic about them. right? Where you're reading every piece of micro and macro data point related to the economy, what's happening geopolitically, earnings reports. You don't need to know all that stuff. Save that for the crazy people like myself. However, you should know the basics, the simple components of markets and how to use that information to your advantage so that you can grow your wealth. And I truly do believe this. You don't have to be a rocket scientist. You don't have to be a mathematician. You do not need an Ivy League degree to benefit from the markets. And that's my personal mission, is to show you how to do that. That's what I'm going to do over these next 4 nights. And just some statistics to get you to ask the question, why not you? Why can't you do this? And think about this. People who are involved with the stock market versus those who aren't have a significantly higher net worth. And you can see that here on the slide. It's 16 times higher. All right. So the takeaway there is be involved with the markets, not carelessly, but know what you're doing, have a solid foundation, and the odds are you're going to be in a better position than someone who is not. And then here's another one. The top 10% of wealth in the US own over 85% of stocks. And it's the primary wealth engine in the US, the stock market. And some people just say, I just want to hold on to my cash, or I'm going to put it in bonds or real estate. And that's all great. I'm not criticizing cash. Because you should have cash on hand. You should have some money in bonds. You should have assets like real estate. However, it's irrefutable. Nothing outperforms the stock market. So you need to have exposure to the market. Now, how much that is, that's going to be different for every person, but you have to give yourself that opportunity, or if not for you, for your children or for your grandchildren. It's important. All right. So success in the markets. All right. I got to move around here a little bit, or maybe I'll throw on my hat. So you guys probably see on the channel, I wear different hats. I was like, people probably think that I'm bald. So quick story. So I have a big forehead. It's a 5 head. You see it? So if I go like that, it looks like I'm bald. So I wear hats from time to time. So you probably see these in the video. No, I'm not bald. I have hair. It's a little thin, but wanted to share that with you guys. I throw in dad humor here every once in a while because I have to. Anyway, back to what we're talking about. Success in the markets is, and this is where we really want to suss out the common ways that people look at trading. They look at investing, and they look at it as a get-rich-quick scheme, but that's not what it's about. It's about building wealth gradually through consistent strategies, not chasing fleeting trends or quick riches. All right. That's not what it's about. And that goes for all parts of it. Investing, right, takes time. Swing trading takes time. Day trading, if you go that route, you have to be patient and gradual and learn a process over time. It just doesn't happen overnight. And so it's about being consistent and following a strategy. And the one thing that it is definitely not is, oh, you only live once, YOLO, let's just put all of our money here into GameStop or AMC or into some risky ticker only to see us lose all of our money. That is not what building wealth through the markets is. That's just foolishness. That leads to financial ruin. And the other part is going too fast. I work with a lot of aspiring traders and investors. And one of the things that really can hinder or slow someone down, and this is going to sound counterintuitive, is that they want it to happen right now. They don't have the patience. If they can't make the money right away, then they don't want it. And what happens is when you try to go too fast in the market and try to force success, that's when the market is going to take all of your money. And like I said, it's not going to feel bad about it. So going too fast in the markets is going to lead to financial ruin. And then the last part here, thinking you are smarter than the markets is going to lead to financial ruin. And that comes from if you have, let's say, a winning streak where you feel like you're on fire, you can do no wrong. That's a point where you have to take a time out and say, all right, this is out of the range of probabilities of the law of averages. I need to slow things down because I'm about to get wrecked. And you can never think that you're smarter than the markets because you're not. And the markets will always win. However, that's where it comes back to safety, strategy, and consistency. And that's what's going to lead you to success in the markets. All right. So real fast, I'm just going to come over here to the chat. I'm going to take a drink real fast. I'm all fired up. I feel like I'm trained in here. All right, people follow me. Thank you so much. Appreciate that. Anybody in education or research, same story. We give so much, but barely get rewarded. It's the truth. Yeah. I mean, it's a shame because a life of public service when you're where you genuinely want to help people, it doesn't carry the commensurate rewards. And that does get frustrating at a point when you're putting in those hours and financially you're looking at it and saying, all right, I'm doing all this. And yeah, the intrinsic rewards of helping people is there, but there's also the financial component. So I completely understand. When I learned about investing post-COVID, I made sure Jay shake everyone around and tell them, yeah. Ben, are you at the point where the majority of your income is from? Yes. Yes, I am. And that took a lot of time. It did take a lot of time, and it's not a linear path either. And that's the thing about markets too, is it's not just, here's the thing, there's investing, then there's trading, and there's different levels of risk involved with the type of trading you're doing. Day trading, risky. You have to have a very strong plan. Swing trading, still risky, but doesn't carry as much risk as day trading. You have to have a strong plan. Investing, you're in for the long haul, still risk involved, but because you're in for the long haul, if you're invested in good companies, you're going to be insulated from some of that. But here's the thing, like that statistic that I shared with you guys, being exposed to the market, the law of averages, probability, it will work out in your favor if you're not careless, if you're not YOLO guy. Let me just put all my money into call options on a particular stock. If you're cautious, conservative, and you protect your capital, you can put yourself in a good place. And we're going to talk about all of that. Yeah. And then Tony says, I think swing trading is a better route for me. Raj says, that was a typo. I just made sure I shake everyone around and tell them, yes, they need to learn. They do. They really do. Yep. All right. So the next slide is going to show you everything that we're going to cover over these 4 nights. And I don't want it to feel overwhelming. And so I have this slide here to say that this is the map and it's not the test. So you are not being tested on this information. And you need to give yourself a lot of credit that you are here tonight, that you could be chilling, watching Netflix, catching up on the final season of Stranger Things. I don't think there's any football on tonight, but you're here taking a class on investing. All right. So give yourself the grace and patience and time to absorb this information. And if you don't get it right away, that's good. That's the normal process of this. All right. I don't want you to understand everything here today. And really tonight is just about the philosophical framework and getting you to understand the power of what can happen through the markets. And you're not behind if this stuff feels new. And when I go to this next slide, I don't want you to panic, but really what this is going to show you is by the end of this class, you're going to know all of this information that I'm going to show you on the next slide. All right. And it's a lot, but don't feel overwhelmed. But the other part is you're going to have these videos that come back to help reinforce the information. So it doesn't have to be a one and done. Okay. And so this is a preview of the terrain. This is not a quiz, and the repetition and the time that you put into this is what is going to help literally pay off the time that you put into this process. So here you go. This is what you're going to learn here. And there are more concepts within the concepts listed here on this slide. I'm not going to read all of this to you because I don't want to insult your intelligence. But this is what we're going to go over the next 4 nights. We're really going to start digging into the technicals and the charts tomorrow. But really what we're going to be looking at just as a summary, market behavior. You're going to know how to read a candlestick chart. You might not even know what that is, but I'll show you what that is. We'll look at one tonight, but we'll actually get into that tomorrow. We're going to talk about execution, selecting stocks, knowing which types of stocks to choose, because here's the other thing. You can invest in a way that you think is conservative and safe, but if you're putting your money in trash stocks, you might as well just take your money, put it in the fire pit and light it on fire. You have to select good stocks, and we'll talk about what those kinds of companies are. I'll show you how to actually use TradingView, how to make a purchase in a brokerage account. We'll talk about taxes, because some people will say, well, I don't want to make money from the markets because I'm going to pay taxes. And then I have to stop and say, so you don't want extra money because you're going to have to pay a little bit of tax on it. This is the dumbest thing I've ever heard. I want to pay taxes. And in fact, I hope every year I'm paying a lot of taxes. And again, there are ways to lower your tax liability, but if you're paying a lot in tax, that's good. That means you're making money. And I want you to make money from the markets. So that's a positive. And there's other information we're going to be covering. So I have a plus area here, how to control your emotions, a discipline component, because I will share this with you. And if you continue on this journey of learning the markets, it's not about the technicals. It's not about the charts. It's not about strategy. All of that comes into play. But those of you out there who are trading and seeing, some of my students in here tonight, they will tell you it's all here. Because if you don't have mental discipline, if you can't follow a plan, if you get too emotional, the market will it will humble you really fast. But the point here is you are going to learn all of this information. You are going to leave here with actionable information that you can apply right away. So this is not going to be something where it's just like I'm a cheerleader and saying you can do this, but that's not what this is about. I'm giving you tools that you can use and apply, and that's what I want. And hopefully a year from now, I get an email from one of you saying, hey, I took to heart what you said. I really learned. I gave myself to this. Here's what I accomplished. That's what I want for all of you out there. So that's what we're going to do. We got a lot to cover. All right. So where are we at? We're at 9:01. Okay. So the real enemy isn't the markets. It's you without rules. So when we think about trading, a lot of people are like, oh, it's a scam, or the market is going to take all of your money. No. The market won't take all of your money if you have rules, if you're conservative. It's you being undisciplined, essentially. And that's what I'm going to show you here is how to be disciplined, how to play with rules, how to be patient, and how to have a plan, how to not be emotional, how to have a structure, and how that structure takes away the emotion, and how the real enemy is never getting started at all. Right? Or quitting too early. And that's the other part too. Some of you out there might be saying, well, it's too late for me to get started. No, you have to start. It doesn't matter where you are, because you will be in a better position 5 years from now, no matter what your age is. If you just get started, you will. So the enemy isn't the markets. It is you, but we're going to put you in charge of you, if that makes sense. That'll make more sense as we get to the final night. But why do people fail at investing or swing trading or day trading? It's because most people don't even begin. Most people will sign up for a class. There were a lot of people who signed up for tonight that didn't show up. You guys showed up. So kudos to you. You are starting, right? You've begun. Most people won't even begin. And so It's a new year. You're taking action. You're ready for something different for yourself. And the reason why people struggle in the markets, it's not because of lack of knowledge or lack of technical understanding, strategies, indicators. It's lack of discipline and planning. And that's what leads to poor decisions. And that's what leads to missed opportunities. So I'm going to show you a basic, simple framework to help you do all of that. And you're going to leave here, again, my goal, with a simple system and strategy that you can apply. So I've never done a class like this before. This is really giving you the heart of investing, the heart of swing trading. Very, very simple, basic way that you can take it and apply it and start building something great for yourself and your family. All right. So what is actually possible? So we're going to start looking at some numbers. You're probably saying, all right, Jeremy, well, this sounds great and all, but give me some math. Can we actually look at some numbers? Can we look at some charts? So yes, we can, because I want to show you what's possible. And real growth is achievable through disciplined investing and swing trading. And I have in here parentheses, what about day trading? Again, that's a different approach. And I'm a day trader, right? But I'm also a swing trader and investor. That requires a different level of intensity. And it's not something that we're covering in this class. Tonight, these 4 days, we're covering investing and swing trading, because this is better to be accomplished if you are in a setting where you're working a full-time job. And it's better to start in these arenas and to grow and eventually move into the day trading area. So investing in swing trading is the ideal place to start for someone who is in a full-time job. But the key for success and for achieving what's actually possible, again, it's going to come back to these words, which you're going to be sick of me saying over these 4 nights, but it's consistency and discipline and having the courage to begin. You already have that step done. And then ultimately the wisdom to be patient. Okay. So we're going to get into some charts here. Let me pull up the chat. Let's see. Gratitude for our time. You are welcome. No NFL tonight, but there is the NHL. Yeah. That's a long season. The videos will be available. So what I will do at the end of every night, I'll get these uploaded, and then I'll send out an email the next day that will include the link for the next session and also the video of the replay. So you guys have that. So that will be available for you. Mark says Montana State is winning a football championship game. That's the only football. All right, we'll go Montana. Paying taxes is a good thing. In my opinion, it is, Ocular, because that means that I'm making money from the markets. But here's the other part. When you're savvy with what you're doing for tax write-offs, you can reduce your tax liability in a safe manner that is legal. So keep that in mind too. Let's say after you hit the highest tax slab, your tax stays constant, so it's free money. Yes. You are welcome. All right. So I just wanted to check that. All right. So let's keep going on here. All right. So some basic terms, because we're going to look at a chart. I'm going to give you some examples of what's possible here in the markets, but just very simple. And this might be very basic for a lot of you out there, but again, this is where we're going to start. Tonight is just basics. So when we talk about stock, it just means ownership in a company. That's all that it means. When we talk about a share, I bought 1 share of Tesla. You have 1 unit of ownership of a stock in the company Tesla. So that's what it means when we talk about a share. Now you heard me say candlestick chart. We're going to look at one here in a second. A candlestick chart, this is what we use as traders and investors to know where to buy, where to sell, how to read trends, how to read other important information. And essentially what it is, it's a visual that shows us price movement over time, but it gives us more data than a simple line chart, which is typically how most people understand stocks. All right. And then the last thing here is a dividend. All right, a dividend. And this will all make sense why I'm sharing this here with you. But this is cash paid to shareholders from company profits. So every quarter, a company, let's say that it is ExxonMobil, XOM, ticker symbol XOM. Every quarter, they, based on what their profit was, they will declare what their dividend is. And based on how many shares you have, let's say that the dividend on Exxon, it's been a while since I looked at their dividend, but let's say 75 cents. If you have 100 shares times 75 cents, that's how much you're going to get paid quarterly for owning those shares. So that's a dividend. Now, let's look at what is possible through the markets, ladies and gentlemen. So here is a chart. This is a candlestick chart. Now, this is zoomed out really, really far. This is Apple. All right. I'm an iPhone owner. I have a MacBook. I'm a Apple fan. I am. Make fun of me. That's okay. But this is Apple. And I just want you to look at this chart here from 2019 to 2026. All right. And we could see that Apple moved significantly higher over that time frame, right? So this is a candlestick chart. If we'd zoom in, we'd see these rectangular bodies with lines sticking out of the top, lines sticking out of the bottom. We're going to talk about those in more detail tomorrow. But I wanted to start here by showing you this chart of Apple. And I'm going to tell you why here in a second. All right, let's go to the second slide. So let's just say, hey, hypothetically, in May of 2019, right here, we had some money and we bought 25 shares of Apple at $44.64. Okay. We had some money. So 25 shares. I got a calculator here. I'm a former English teacher too. I have no math background, just so everybody knows that. All right. 44.64. So $1,116. So we had some money on the side that we got from our tax refund, right? So in 2019, we bought 25 shares of Apple. And we just said, hey, we're going to sit on this. Okay. And that's what we did. We bought Apple, we sat on it. And then here's what happened. Oh man, Apple started to go up. We're feeling good. And then it came down, right? And we had a little bit of a bear market here. Does anybody remember what happened in March of 2020? Anybody want to recall what happened then? COVID. Yes. So COVID happened in March of 2020, and we had one of the shortest bear markets on record. It dropped 35%, and it got bought up very quickly, right? So we had a bear cycle. And then what happened after that? This thing rocketed, pushed up, kept moving higher. And then 2022, the government printed a lot of money because of COVID, pumped a lot of stimulus into the economy. And what did the Fed say that they had to do? They had to raise interest rates. And that triggered the bear market of 2022. Boom, down we go. Right? But we're still in our Apple and we're still profitable because we bought way back here. So despite a bear cycle, we're still good. And then it climbs, it keeps going. Wow, this thing is just ripping. And then February of last year, we're hearing talk about this thing called Liberation Day and tariffs, President Trump. And what happens? We get a 21% drop, which technically is a bear market. Oh, but hey, we bought this at $44. All right. So I want to point this out. We bought at $44.64, May of 2019. We went through 1, 2, 3 bear cycles, and the price is still up in the 200s. It actually, Apple got up into, I want to say the 280s here recently, but we sold at 200. We're being conservative. We sold at 200, right? So let's take a look at what would happen in that situation. All right. So here's our 25 shares that we bought for $44.64, and we didn't ride it up to $280. We sold it at 200, right? we got out. This was just this was a long-term swing trade for 5 years. So our investment of $1,116, we profited almost $4,000, and our total amount of cash is now $5,000 off of 25 shares over a 5-year period, right? And that's selling at $200, and that's despite 3 bear markets. And you could see, all right, well, what if we had 75 shares? All right, our investment's going to jump up. It's going to cost us $3,300. But our profit at that point, selling at 200, it's almost $12,000. And you could see that as the number of shares increases, and let's say that you have 1,000 shares and it costs you $44,000 over that 5-year period, your $44,000 is going to return to you $155K over a 5-year period, 3 bear markets. And the reason why I point out the bear market piece is because there are doomers out there who are always calling for the great crash. Oh, it's going to crash 1929, 2008, the Great Recession. Oh, we're going to zero. Okay. That does happen. There are bear cycles in the market. They happen. It's a natural, healthy thing to occur. But go back and look at SPX chart from its inception until today, and you tell me what happens after every bear cycle. The market not only returns, but it exceeds its previous highs. So the doomers can be fearful and afraid all they want. The math doesn't lie. And in fact, when you get those bear cycles and those huge, massive drops, those are your greatest opportunities. Okay. So wanted to make sure that I pointed that out. But you see here, $1,000 over 5 years invested in Apple, which I wouldn't say that they're not volatile like a Tesla or a Microsoft. They're still a big tech company that does move pretty swiftly, but they're a pretty consistent company in terms of their price action. All right. But look at that return on 25 shares, $1,000, almost $4,000. So instead of buying a TV or a new iPhone, take the money, buy 25 shares of whatever company is up and coming that has strong fundamentals that can grow your money over time. Now let's look at this with dividends. So we talked about how every quarter a company pays out dividends, and guess who pays dividends? Apple does, right? So if you were holding Apple over that 5-year period, it shows you what you're going to get paid in your dividends, and you can see that that goes up the more shares that you own. And so your profit is going to increase, not massively, but imagine if you're compounding this and holding it for 10 years, 15 years, 20 years, 30 years. And don't just think about yourself, think about your kids, your grandchildren, right? This is bigger than us. And you could see the types of returns that you could start getting despite bear cycles, right? And that's what those dividends included, right? And there are tons of dividend stocks that are out there. Now, let's really ramp it up. So let's consider a bull cycle. And what I'm saying by a bull cycle is, let's just assume that the same amount of growth that we got in that five-year period that still had 3 bear markets. Let's assume that we have that same type of growth over 5 more years, 10 more years, and 20 years on Apple, where it grew 35% in that time frame. So check this out. Those 25 shares that were worth 200 in 2025, if we follow that same process, it's now worth 18,000 in 2030, 65,000 2035, and in 2045, 20 years from now, $430,000. And you could just see as that number of shares goes up over time, and let's just say you had 1,000, you could see how significantly that value is going to grow. It's mathematics. It's compounding. It's the market. Now, because I want to make sure that we're looking at the bear side here, because there might be some of you out there saying, oh, well, the markets don't just go straight up. All right, so here we're looking at adjusting those prices by assuming some significant bear action over the next 5, 10, 20 years. All right. So that previous chart table that we looked at assumed around 35% growth like we saw from 2019 to 2025. This cuts it down to starting at 15% to 12% to 10% compounded annual growth. But you could still see that number climbs, right? Let's look at our 25 shares from 5,000 to 10,000 to 15 to 33,000. And so even if it is a bear market, you're still going to get a return. The return is still there. It's put out there on the chart. And again, you have to pick correct stocks. You have to pick high quality companies. You can't buy trash because you'll lose money. But even during bear cycles or when returns are down, you're still going to be in a position that is better than if your money was just in cash, gaining next to nothing in interest, right? You're not going to be able to get from a money market account or a savings account what you can get in the stock market. All right. Any questions about those tables? And really, here's the key point is you can't afford not to start. And that's what I'm trying to drive home to you, that it doesn't matter how much you're beginning with. Even if you start small, putting a little bit away every month into a high quality company or even into an index fund, the S&P 500, which returns on average yearly 10%, you're going to have more money if you're disciplined and consistent with it in 5 years than you would if you just put it in a savings account and did nothing. So no matter where you are, the key is to get started. Okay. Questions? I know I covered a lot there. Thoughts, takeaways. Yes, and I'm not, Ben put in here, I'm not a CPA advisor. This is educational. Yes. Yeah, Josh. Yep. So I was going to bring up the stock splits. Apple did split. Yes. Multiple times. Yes. So that's the other part. Stock split, right? NVIDIA did a 10-to-1 split in May 2024. Netflix just did a 10-to-1 split. So yeah, company split. All right. Ocular says still here. All right, great. I don't got 5 years, need to work now, but I agree 100% with the rule. So much to make with discipline. So here's the thing that, so student of sim, what I would tell you is if you don't, here's the way you have to look at it. If you don't put anything away, if you don't invest anything, you're going to be in the same position. Nothing will change for you. If you're putting stuff away from a consistency perspective over time and you continue to do that, you'll have more then than you do now. And at the same time, you can learn other things like the swing trading to help increase the profits that you're bringing in, but you will be in a better spot if you just start. Yeah, it would be nice if you could split the tax bill. Yes. Apparently so this is where a good CPA is important to have, right? So I don't claim to be a tax expert, but I do do rigorous documentation of everything. But my tax accountant, I'm like, here, but with this new tax bill, I think there's a lot of tax breaks benefits that are in there for people involved in the market. So all right, so student is sim. Oh, I'm trading every day. I meant to say that I'm making so much, but giving, oh, I got you. I see what you're saying. Rules is why I'm falling short or just quick analysis can make mainly shorting these days. Yeah, again, and I'll say this too, when it comes to the stock market, it's not the technicals and the charting. I know some phenomenal technical analysts, chartists, but it's discipline. It's always discipline. It's always, and here's the other thing too, and I've said this in classes I've taught before. trading and investing is a mirror into yourself. It's going to show you the things about yourself that you need to confront and fix about yourself. And you have to do it, because if you don't, you're going to lose money. So it is truly a powerful self-development tool, because you're forced to confront these things, because if you don't, you're going to lose cash. Student Sim, email me and let me see if I'll try to help you out, or I can take a look at your trading plan for you. And then Ben says, while you're paying your bills with your trading, are you also building your Yes. Yes. Yeah. So, and that's the thing, is and this is where you get into some of the more advanced concepts related to the markets, because it's not just shares that exist for you to profit from. If you own 100 shares of a company, you can then rent out your shares using options and bring in monthly passive income. So if you have a long-term portfolio that you can sell options in, you can generate passive income monthly and accelerate your wealth building. And here's the other thing too. And these are things that we're not taught. You can get paid to buy shares by selling what are known as cash secured puts. So you might say, hey, I want to own Apple, but I don't want to own it until it comes back down to $205. So you can sell a $205 cash secured put on Apple and get paid, right? They'll pay you money. The market makers will pay you money. And basically, when that options contract expires, it's at $205, you just have to buy the stock. So you're getting paid to buy the stock. But here's the cool thing. If it's at $206, you keep that money for free. Now that's an advanced concept. I'm not trying to overwhelm people, but I'm just trying to share with you the scope of what is available in the market is immense and is powerful in terms of what it can do. Yeah. So here, I'll just put it in here. Courage pays better at gmail.com. All right. So we're going to come back over here. All right. So I got a couple more here to show you. So this is just showing you again, and this is just looking more at the long-term investing component. If you just put away $100 a month, $200, $500, $1,000 over a 3-year period, 5-year, 10-year, up to 30 years, right? And then just assuming a 10% return year over year. And that's based on the return of the S&P 500. It's 10%. Well, you could see if you're doing $100 a month over 3 years, $4,000, 5 years, $7,000, go up to 20, 69,000, 30, 220,000. And you could see how that jumps up as the amount that you're putting away jumps up. But again, if some of you are looking at those numbers and are saying, well, that's not enough. Well, that's your brain misleading you, because if you don't start somewhere, you're not going to get that snowball rolling to grow bigger and to compound, right? But over time, if you do that, if you're consistent, you might start with 100, but 2 years from now, that 100 might jump to 500, right? And then in 5 years from then, it might jump to 1,000. So start wherever you're at, invest, put the money away. And I'm going to show you when you should be buying. So that's going to be the system that we talk about. But the key is to just begin, to just get started. And then this slide is important too, because I want you to think about kids, right? I have 3 children of my own. I'm sure a lot of you out there have children, or maybe some of you have grandchildren, but consider if you start putting $100 away for your kids or your grandkids, starting at age 3, by 18, that will have grown. If we go 10% every year, assuming the return of S&P 500, they will have 21,000 by 18 years old. At 21, it'll be $43,000. Now, look at this. This is amazing. If we don't contribute anything else here, after 21 years old, and it just sits there, and you started this account at age 3, when your kid is 65, it's going to be worth almost $3 million. Is that amazing? I think that's amazing. Does anybody else think that's amazing? Or is it just me? And I think that everything about the market is crazy. That's awesome. So if you have children, even if you're not starting at age 3 or age 5 or age 10, wherever, if you could leave them something, I mean, how nice is that? Or if you have grandkids, I mean, that's a heck of a thing to do, right? And it doesn't even have to be $100. It could be $50. It could be $25. But that compounding, that time, if you just set it and forget it and you just do it and you know how to check in on it, it just makes sense. We have to do it. We have that responsibility. We have that responsibility. As I'm getting fired up. I'm getting fired up. All right. We're almost done here, guys. I know. I get a little excited here. All right. Kind of shifting gears a little bit. So what if we can accelerate now? So we talked about the investing. What if we can accelerate wealth without day trading? Again, day trading is intense, but this is where we start talking about swing trading, where smart timing meets long-term growth. And basically what swing trading is, it's buying stocks or options where we hold them for a few days to a few weeks, or maybe even a few months. And what we're basically looking to do is profit off of a short-term movement in a stock or in a company. Recently, if I talk about the company Tesla, I brought them up a few times here tonight. Very volatile stock. It has significant moves. I think it finished up $17 today after 9 red days in a row. But it had a period where it was down, and in September it started to climb and then hit, I believe, around $498. But it had $100+ move. But using simple strategies for swing trading that I'll show you, we're going to build the foundation when we start talking about investing, you can apply that when it comes to swing trading for short-term profits. And why does it matter? Because a lot of times people think that any type of trading is similar to what you're doing with day trading, that you're staring at charts all day. But I'll even tell you this, even with day trading, you're not staring at charts all day. If you're doing that, you're doing something wrong. With swing trading, you don't need a huge account to start. That's not true. And the beautiful thing is you have your investing that you're doing. The swing trading, you can generate profits to then use to put into your longer term portfolio. And it aligns well if you are working a job, if you're swing trading. It's actually the best place to start versus day trading, unless you have chunks of time where you're able to fit it in. True story, when I was principal, there toward the end, I was fitting in chunks of time for day trading. Kids were supervised, everything was taken care of, but when the kids were out of the building and there was some market time left, I was day trading on my phone. I wouldn't advise it though, unless the schedule fits. And again, why swing trading, why it's important, because you have a plan to follow, a system, a structure that can lead to those types of profits. And so if we think of long-term investing as the engine for what we're doing for building our wealth, swing trading is the nitro boost, if we're using a little bit of a metaphor here. And so when we combine these two together, swing trade is going to give us cash flow now, while the wealth is growing always on the back end from our investments in our portfolio. And then what that's going to lead to is confidence, because we have this machine that we built, this system that is always moving, it's always progressing, it's always growing. And again, at the end of this is what I'm going to share with you. This is all the foundational components of what you're going to leave here with on the final night. So the core framework, so everything is going to fit into this framework, the investing and the swing trading. Again, I distill this to try to make this as simple as possible. And so this little framework this is how I'm going to teach you investing and swing trading over the next 3 nights, because we're almost wrapping up here night 1. And these are the components that we're going to anchor the strategy to. All right. And so it's going to start with capital, trend, entry, risk, and time. Capital just meaning how much money can you allocate to either the investment or the trade. The trend, this is where the charting comes into play and the technicals, knowing where to make the purchase to start the investment or to add to the investment, or where to initiate the trade and exit the trade. The entry is pinpointing the exact price where we want to enter. The risk, what can we lose with this particular trade, or what type of risk are we willing to take on this investment? What are we willing to lose on this investment? And what is the amount of time that we have for this investment or trade to work out? So this structure, this system that I'm going to teach you is going to follow these components so that everything can be applied to them. And it's very simple for you to remember. It's just basically all the concepts plug into it, and it's boom. You can look at a chart and say, all right, this is the capital that I have. Here's the trend. Here's my entry. This is my risk. This is how much time that I have. And it becomes something that's second nature to you. So you'll be able to use this both for your investments and your swing trading. And that's what we're going to do. And that is going to take us to, that's the end of night one. Oh man. So we covered a lot. So we basically went over the fundamentals, the essentials, showing you what can be done in the markets. We talked about what's possible, how you have to be disciplined and have a plan, how YOLOing or not having a plan, being careless is going to lead to financial ruin. We talked about how money can grow over time. We talked about that structure for the system to follow for investing in swing trading. And we're going to get into the brass tacks, the nitty gritty tomorrow. So we're really going to hit the technicals, and I'm excited. So you got to be ready for tomorrow. Have that notebook ready. I hope you guys took a lot of notes, and we're going to get into how you guys are actually going to start doing this. And what I'm going to ask is, I know many of you out there have TradingView downloaded. There are free versions of it. You don't need the paid version, but please download it, because that's where you're going to pull up the charts that we're going to be looking at. And if you're actually going to take this seriously and start applying it, you're going to want to have this downloaded on your computer. You can get it on your phone as well. You're going to need it. And then the homework is just a simple question I want you to think about as we hop off here tonight. I'm going to open it up for questions here before we jump off, but think about what we talked about here tonight. Just think about your situation financially, where you are, what you're looking to go. I don't want you to answer this in the chat. This is just more for you to reflect on. And what could you grow your money into 3 years from now, 5 years from now, 10 years from now, 20 years from now, or even if not for you, for your kids, or even if not for your kids, for your grandkids? I want you to think about that. What's possible for you? And here's the other thing I want you to ask. Is it worth it to you? It is what you can accomplish by doing that. Is it worth it to you? And we'll start tomorrow. I'm going to ask if anybody would be willing to share their response to that. So that's what I got for night one for you guys. Let's come back through here. Jay, compound interest is the eighth wonder of the world. Ben, well done. All right. Thank you. Try to download Trade. It's not, there are free versions of, TradingView. So the entry level version is free. Raj, you are welcome. Thank you so much. Ocular downloading. Yeah, you can use it web-based. Ocular, thank you for pointing that out. Yep. So I find that for me, the desktop version of TradingView is much faster, but for what I'm doing and having multiple charts open, that works for me, but you can absolutely use the web-based. Jeff, you're welcome. It's just you're thinking about it, right? You're just thinking about it, nothing to write down. Shankar, you're welcome. Dave, you're welcome. Student Asim, you're welcome. Joseph, you're welcome. Brian, you're welcome. Natalie, you're welcome. Daryl, you're welcome. Melanie, you're welcome. Asim, I appreciate that. Yes, the recording, I'm going to send that out in the morning. Oh, well watching. That sounds cool. Yep. No, Ocular, I appreciate that, man. You've been helpful in making sure that I'm keeping everything on point here. So, Tony, you're welcome. Man, all you guys, thank you so much. Any questions before we wrap up here? Thank you, Pam. Thanks, Fred. All right, if I don't have any questions, I'm not going to hold you guys up. Go get some rest, some sleep. I appreciate you guys. Have a great night. Take care, everybody. We'll see you. Thank you.